Going to say is the hotel market review. We've got my good friend Boaz Ashbel. Mr. Ashbel is the managing director with me over at the Aztec Group. He focuses solely on hospitality acquisitions, dispositions, joint ventures, and debt and equity financing. Bo's area of expertise involves a variety of hospitality product types, including select and full-service hotels, convention-oriented hotels, as well as condominium hotels, and I'll even add in resort hotels. He's an investor, owner, operator, and broker of hotel properties nationwide. Today we're going to discuss current valuations in the market, as well as trends and opportunities. Welcome to the show, Bo.
Always a pleasure to be here, Jim.
All right. Thank you, Bo. Now, give us a little bit of background to kind of set the stage so people know where you're coming from.
We are at Aztec very active in hospitality projects. We arrange debt, equity financing, joint ventures. We do some investment sales. We are also, as you mentioned, equity investors ourselves. We are very dangerous when it comes to the hotel business.
Oh, yeah, you're loaded and ready for bear, huh? Well, now, let's see now. On a national scale, are hotels hot or not? Because I remember reading that it was hot a couple years ago, then it was cooling off. It had a lot to do with these REIT stock prices. Give me a little bit of flavor for the national market.
I would say next to multifamily, hotels are probably the hottest class of commercial real estate today.
Really?
They have rebounded very, very strongly. A lot of it has to do with the fact that there's been no significant addition to supply in the hotel space in quite some time. Visitation has increased, business activity has increased. As a result, hotels are performing very well. 2012 will probably be the best year since 2008.
Wow, that's pretty aggressive. Now, is this for just resort properties, just like properties that serve the businessman, or is this across the board?
It's pretty much across the board. Obviously, there are certain markets around the country, certain sub-markets that perform better than others, but it's across the board. A lot of it has to do with visitation to the United States. So far, year to date, I believe visitation is up 11% compared to last year.
Wow!
It's and that is spurring it. Obviously, travel domestically is important as well. But it's a number of factors that are contributing to it.
Now, let's talk about the investors in the hotel space. Are they big companies, little companies? I mean, I always thought that these smaller hotels by the roadside were kind of local operators, and then you had the big chains, but can individual investors get involved? How does all that work?
Absolutely. The big chains are, for the most part, not that big investors in the real estate side of the hotel business. They like to market the brands, they like to operate whenever they can, but for the most part they are not owners of real estate. There's obviously exceptions, but you see activity by REITs and by private equity funds. You see activities by investors, individual investors. You see some activities by offshore investors.
Really?
Who, for a variety of reasons, prefer to invest in this country. For the most part because it's a great place for a flat capital, and also because they feel that real estate is undervalued compared to what it costs in their own countries.
Well, I'm sure they also like hotels because they can reprice their property every night.
It is hotels are complicated properties. There are operating businesses that require 24/7 operation. And as a result, are not as simple and easily run, and are not even as simple to develop.
Now, you talked about development. Let's go into that. With no new supply being added, I've got to believe that well-respected operators are now able to be capitalized on both a debt and equity basis. Am I right? Is there money out there to do hotels?
Equity is plentiful. But it's careful.
Mm-hmm.
What is happening in the last year or so is the debt has become much more available. There's also debt available for construction of new projects. It is very conservative in terms of how lenders underwrite, but we do have some options today for projects that are well capitalized, that are sponsored by groups that have track records and have good brands. Absolutely.
Okay, so then there is good opportunities out there. There's money to take advantage of those opportunities for if you're a good, solid, respected operator. Let's see. Hotels here, and let's change a little bit now. Hotels in South Florida, on the sand versus not on the sand. Is the demand kind of the same from investors and developers?
There's a huge price premium that properties that are located on the ocean, on the sand, command over properties that are not on the ocean. As a general rule of thumb, simply stated, those properties are very, very hard to replace, and they are always highly desirable because people just love to stay on the sand, particularly when they're traveling on vacation. Having said that, there are a tremendous amount of great hotels that have been developed in the last several years that are not on the sand. In case of South Florida, a case in point would be Brickell Avenue. Brickell Avenue today is probably the hottest hotel market, or one of the hottest hotel markets in South Florida, maybe after Miami Beach. So there are opportunities everywhere if one can identify them and can execute on them. They're not easy.
Okay, now you mentioned before that there was financing and capital available, but it was tough to execute on some of them. You've closed some hospitality financings and investments and sales in the past few months. Can you tell us a little bit, generally flavor? I know you're under confidentiality on a lot of stuff, but generally, what are you getting accomplished in the market right now?
When you're talking about permanent financing, which is typically would be applicable for properties that are already existing and would like to refinance, the CMBS market is active. Those would probably run, let's say, up to 70% loan to value.
Okay.
There would be a fixed rate, non-recourse financing. Generally, that will be priced in the 5.5% range.
Well, this sounds very good on a historical basis.
It is very good on a historical basis. Obviously, advantages and disadvantages to CMBS loans. But having said that, it's there, it's available, and definitely can be executed upon.
How about banks?
Banks would be ideal for borrowers that require renovations, for properties that are not stabilized, don't have stable cash flow. Banks also require personal recourse. Yes, banks are lending, including a number of banks here in South Florida. They do understand and like the hotel business, and it's a function of finding the right sponsorship and the right project. But those can be done.
Now, let's talk about statistics on a local level, the health of the local lodging market. Year to date, how are South Florida hotels faring? Because I've read a bunch of mixed stuff. I thought it was going great, and then I saw that some employment might have been slipping, some rate and stuff. But that's, to me, the newspaper. We'll hear later my opinion of the newspaper. What does a practitioner see out in the market?
I think the hotels in South Florida in general, Miami in particular, are performing tremendously well so far in 2012. I will tell you that Miami is probably ranked in the top 3 in the nation in terms
Top
of
3
in the nation in terms of market, in terms of improvements year over year. In terms of what we count as revenue per available room, which is a combination of both your occupancy and your average daily rate. Miami is ranked number 3 in the country.
Number 3. Well, yes. Who are we behind? Honolulu and New York?
We are behind Honolulu and New York.
Well, at least I know my business, huh?
That's who we're behind. But that's a very, very good place to be at a very good company, and that is the justification for being able to support ground-up construction today on new projects if the right sites can be identified and the right brands are available.
Well, listen, I live right by the 112, and I don't see any slowdown in the car volume going from the airport to the beach. And I can remember when my parents first brought me here, I can close my eyes and still see the Welcome to Miami Beach sign. It's something that means something to people worldwide.
Then there are a number of submarkets in Miami that could definitely use an additional supply. Miami overall is running about 80% occupancy year to date, which in the hotel business pretty much means that you are at capacity because of the daily changes in supply, in demand. You're pretty much running at capacity. So what we're seeing also in Miami is real rate growth. Again, would be the second year in a row we're seeing real rate growth. So far this year, I believe the average daily rate in Miami has increased by about 7.6%, and that is tremendous.
Well, it sounds to me like the statistics point to the fact that Miami could absorb an addition to supply.
Absolutely, absolutely.
Now, how about the business guys out by the airport? What's going on out by the airport? We've only got about a minute left, so I know it's a big topic, but just generally business travel. How about that?
The airport in Miami is a machine. It is operating 365 days a year and cranking unbelievable numbers. That's absolutely a market that can support new addition. Miami Beach. I like Rickle Avenue as I pointed earlier. I even like a place like Midtown. I think Midtown could use some hotel rooms. Dadeland is another area that could be interesting. So the Gables, there are a number of areas that can support additional hotel rooms in Miami-Dade County.
All right, we'll stop right there. I don't want you giving out all your secrets, but there is something I want you to give out. Please give out your phone number and your email address in case somebody wants to follow up.
My direct phone number is 305-938-8617. My email address is BASHBEL@aztecgroup.com.
Bo Ashbel, hotel expert. I want to thank you for joining us on Freedom Business. Hopefully you'll come back in a few weeks and give a few months and you'll give us an update on where we are, maybe for holiday time. Bo Ashbel, Managing Director of the Aztec Group. This is Jim Fried. We'll be right back with Rob Denton. Stick with us. You're not going to want to miss Rob. Thanks again, Bo.